Hello, everybody. This is Toni Turner, and welcome to the Market Now on Friday, November 14th at about 2:15 p.m. Eastern. Well, turbulence in tech stocks could increase in the coming week as the market reacts to the quarterly report from NVIDIA, the world's largest company by market value that is at the heart of Wall Street's artificial intelligence trade. NVIDIA carries an 8% weight in the S&P 500 and a roughly 10% weight in the widely followed NASDAQ 100, which we will talk about in just a minute. NVIDIA will announce earnings this coming Wednesday, right after the closing bell. So stay tuned for that. And on that note, let's go on to three charts that could give us some insight into the week to come. First of all, as we always do, we're going to look at a daily chart of the S&P 500 SPDR, symbol SPY. As you all know, this is the ETF that closely follows our benchmark S&P 500 index. Now, when I captured this chart today, the SPY was trading at $272 and change, back below this was the all-time closing high back here in October at 690. And right now you can see it's trading just below its 20-day moving average, coming in at 677. That's the red line right here, coming in at 677. And so far today, as you can see, price is still above the green line, the 50-day moving average, which is coming in right here at 668. We do also down here have the black line, the 200-day moving average, coming in at 613 and change. Now, we know that earlier this year, and you can't see it on this chart, but earlier this year, the market rolled over in general, and the SPY dove to its April 7th low at 482. Then it rebounded gradually and walked up, for the most part, walked up its 20-day moving average, the red line, walked up pretty much in an uptrend all the way. Didn't really break the uptrend. We had one little down period here in the first part of October where the SPY fell down and touched its, closed just above its 50-day moving average, but popped up the next day and managed to climb again up here to its October high, which was an all-time high at 690. And from that April low that you can't see here up to this 690 was about a 43% gain. So that's pretty darn good. Now from there, nothing goes up forever, right? The SPY fell down to its 50-day moving average. Look how important these moving averages can be when it comes to providing support. Very cool. Then rallied at the beginning of this week and then fell the last 2 days down to where we are right now, again at 672. Now, what do we do with this? Going forward, we have to say, well, where's support and resistance? And we know, of course, that we have potential resistance right here. It's sitting over the 50-day right now, so potential resistance at the 20-day at 677. Then this little pivot here at 684, and up to, again, the all-time high at 690, potential resistance there. We have potential support here at the 50-day moving average, which is coming in at, again, about 668. We have the October low down here at 653. We have the August pivots down here, the August pivot at 619 right here. Well, I'm not drawing a very straight line, guys. And 200-day moving average at 613 and on down. So remember, markets move in cycles. I tell you this all the time. They do not go straight up, and please God, they do not go straight down. And we've had this beautiful uptrend here ever since April. So many stocks right now, especially tech stocks, many of them are overvalued. And in part of this process is traders and investors take profits. So it can't go straight up forever. And that's a good thing. It needs to shake out. So please, I've been taking profits for the past couple of weeks, and I've told you that, and raising my stops on my longer-term trades. So please be careful here and keep an eye on NVIDIA's earnings coming out on Wednesday, this coming Wednesday, after the closing bell. Our next chart today is a daily chart of the Invesco QQQ, symbol QQQ. which follows the NASDAQ 100 index, the top 100 non-financial stocks in the NASDAQ stock market, including, of course, Meta, Netflix, Apple, Tesla, that whole group. Now, when I captured this chart today, the Qs were trading at about 610, down from October, the October all-time high up here at 637. Like the SPY, the Qs are still trading below the red line, the 20-day moving average coming in at 619. But so far today, the Qs are also just above their 50-day moving average, in the 50 days coming in at 605, and the Qs are at about 610. So just right there. The 200-day moving average down here, if you want to take note, is at 541 and change. Now we know, just like the SPY, that back here left on the chart, you can't see it, but the Qs rolled over in April and dropped to that April 7th low that everybody had, and the Qs, it was 402. Then it rebounded really beautifully here, and like the SPY, walked up, for the most part, walked up its 20-day moving average. Now, because of the nature of the beast, the Qs are always more volatile than the SPY. As you can see here, it actually closed below the 20-day one day. A couple more days up here, it closed below the 20-day, fell back down, but then got up more energy in September, kept moving up, excuse me, down a little bit, and moved up to the October high here. Lost a little bit of enthusiasm here in October. We're getting stretched out here by now. Quick pop to new highs at 637, and then back down to where we are now at 610. Still, this run up from the April lows up to this high is a 49% gain, so nothing to be ashamed of there. Now going forward, much like the SPY, we look at the resistance here. We see the 20-day moving average again at 619 could provide some resistance all the way up to the highs up here at 637. Potential support here as long as the Qs can stay above the 50-day. And what we just talked about, also we have the August and September right here. We have the August and September pivots from 552 to 559, and of course again the 200-day down here at 541. So all we can do is keep an eye on this. You know, I'm happiest when the indexes are above the 50-day moving average. Now this 50-day though is getting really tight when price goes sideways on anything. When it goes sideways instead of up, the moving average tends to come up and meet the stock price, because as I always tell you, it's just like running up a staircase. We can take great big steps and move up the staircase very quickly until we get tired. Then our legs start moving more slowly, and our knees don't go up as high, and we start to slow down. And the Qs and the SPY, just like that, have been running up this staircase for a long time, and their steps are starting to slow down, and it's totally natural and normal. Again, profit taking happens. So again, in the coming week, and please know again that NVIDIA is a big part of the QQQs in the coming week. Do stay tuned if you're in tech stocks at all to the earnings that comes out in NVIDIA's earnings on Wednesday afternoon after the closing bell. Our final chart today is a daily chart of the Global X FinTech ETF, symbol FINX. It has 64 holdings. Some of the top holdings are Coinbase Global, SoFi, Intuit, PayPal, and Block. Now, I made this chart a little shorter term than the other ones we were using, so that you can see the pattern here. When I captured this chart today, the FinTechs right here, the FinX I should say, was trading at $30.45. Now it did, and of course you can't see it on this chart, it made an April low at $23.50 way back there. This chart shows you the end of May, but if we were to look further left, we would see the April low coming in at $23.50. Then it walked, and you can see starting in the end of May and into June, the FinX walked nicely up its 20-day moving average. Pretty steep move up there, really. And it moved up here to $35.50. Then it fell down to 32 down here and basically walked sideways here, then climbed up through part of August, then climbed up over its 20-day moving. It was under the 20-day for a few days, then moved up over the 20-day here in August and September, fooled around under the 50-day, but then broke out the end of September and kept going, broke out to 35 again, moved back down, and at the end of October made actually 3 more highs around this 35 and change highs here. So this is a definite resistance here. Moved back down and then moved up to its, at the end of October, it went up again to 35, and then did a dive. And in November, as you noticed, a lot of stocks have been simmering down a little bit. So it's fallen down here, back down below the 50-day, the 20-day, then tried to stay over the 200, could not, and fell to where it is at 30.45. And that's a 15, from here to here is a 15% drop. So a lot of the ETFs I'm looking at today are kind of difficult to love. And please know, I'm not going to force any trades next week because I think it is going to be kind of volatile. That said, I'll keep an eye on the Finex. And what I do know from looking back on a longer term chart is that it does have, it's down quite a bit here for this particular industry group. And it does have support from back in May. It has support at the $30 line here. So, and it's getting overbought on the RSI. It's down at 33. And overbought is 30. So I'm going to keep an eye on this. If in the coming week, if the market's behaving reasonably well, and if the Finex can stay above, I'm not going to give it much room here, if it can stay above 29.50, I will buy, if it can stay above that for a few days, I will buy a small, very small position in my trading portfolio with a stop at $29.25. If and when the Finex closes above 34, I just want to see if it can get up into this range of resistance here, if it can nose its way up into that. If it can get up to above 34, I will add to my position and my stop will be a trailing stop. So you may want to keep an eye on the FINX in the coming week. And now, please know that at ToniTurner.com, we've lowered the price of all of our online training programs to make them more accessible to everyone. So if you'd like to become a more profitable trader, now is a great time to check out my timeless training programs. In my program, How to Bottom Fish Like a Pro, you'll discover a simple yet profitable strategy that all traders and investors want to know, called How to Buy Low and Sell High. I'll show you an easy-to-learn step-by-step process that tells you when to enter an undervalued stock, how to manage the position, and as you see certain signals that the uptrend is about to end, when to take your profits. Our new low price for this program is only $199. And by the way, some of my trainings listed right here are priced at only $59. When you order, you will receive special bonuses, including 1 month of Metastock daily charts or Metastock real-time charts for free. And once you purchase, you have unlimited access to learn at your own pace. So from our ever-popular, I love this one, 7 Steps to Successful Trading, to how to swing trade successfully, how to trade the trend to profits, how to read charts, as I always say, great for novices, anybody who wants to brush up, 3 winning setups. We had a little trouble with that product page, but it's all back to normal and good now. And how to bottom fish like a pro. Discover how my online programs can help you earn more money quickly and easily. So check them out now by going to the link on this screen, or better yet, simply click on the orange button below. Until next week, be careful out there. Keep green on your screen. I'm Toni Turner, and this is The Market Now.